Hello and welcome to episode number 18 of the educational series. My name is Zach Tussle. Thank you for joining me today. Today we're going to be discussing tax loss harvesting. It's on the brain right now because it's the end of the year and we're doing a ton of this for our clients in their different accounts. So, speaking of accounts, that's the first thing I want to touch on with this topic. It's only doable in one or two specific type of accounts, and they are brokerage accounts. So some people call them individual accounts. You could also have a joint account that's a brokerage account, whether it's just you or you and your spouse or you and your brother, it doesn't matter. But these are after-tax accounts. So it's after-tax money, and you get a 1099 on this type of account as you make money in the account every single year, or don't make money. Okay, so let's do an example. Here I have drawn out stock A versus stock B. Now, we bought stock A for $10 a share. Now it's trading at $11 a share. As you can see, the chart goes up over time. Now, the chart on stock B goes down over time. We got in at the same price, $10 a share. Now it's only trading for $9 a share. So we've taken a loss on stock B compared to a gain on stock A. Now, what we could do for tax purposes at the end of the year is we could either sell stock A and realize a capital gain, we could sell stock B and realize a capital loss, or we could sell both of them and try to offset a capital gain with a capital loss. That way we don't owe the IRS as much money in this particular tax year. Let's do some numbers. All right, so we've got some numbers to work with. Stock A versus stock B. Stock A was our winner. We made $1,000 on stock A, and I made the numbers bigger. Stock A, we made $1,000. Stock B, we lost $1,000. So depending on where you're at income-wise for the year is going to decide what you want to do within your brokerage account, your single account, your joint account. If you've made more money than you've ever made in that particular year, we don't want to realize additional gains within the brokerage account because that's just going to jack your tax bracket up even higher. But if you haven't made as much money, it might be a good year to create a gain within the account since your tax bracket is naturally lower. The flip side of that is if you've made more money than you've ever made before, we can create a capital loss within the account so that way it lowers your taxable income for that year. So really just depending on your situation, that given tax year will tell you what to do within the brokerage account to pay the right amount of taxes that's right for you in that given year. And a lot of times that's a conversation we have with the CPA, the client, and then us, the financial advisor. So two last important concepts before we leave here today. Selling versus holding. When you sell a security within your account, you are realizing that gain. When you hold a security within the account, it is an unrealized gain or an unrealized loss. So if you have securities within the account, you haven't sold them yet, say you've owned Apple stock for 6 years and you've never touched it, you probably have an unrealized gain on Apple stock. Now, once you sell that Apple stock, you will realize that gain and that gain will become taxable in your brokerage account. So last thing for today, guys, long-term gains versus short-term gains and short-term losses versus long-term losses. You can only offset for tax purposes a long-term gain with a long-term loss. So the time period has to remain the same. Long-term versus short-term, if you held it for over a year, it's long-term. If you held it for under a year, it's a short-term gain or loss. So short-term can offset a short-term, and a long-term can offset a long-term. Thanks for sticking with me today. I know that was a little bit more of a complicated video. If you have any questions or you have questions about your specific tax situation for the year, be more than happy to get on the phone with your CPA, look at the brokerage account, and make sure we're doing the best thing for you. Again, thank you for joining me for episode number 18, and I hope to see you next time.